The Nightly Business Report.
Good evening. Tonight, 138,241 foreign visitors visited Sri Lanka in June 2025, a 21.8% increase over the same period the year before. Despite recent media allegations to the contrary, the Central Bank of Sri Lanka has stated that no decision has been made to ban the import of vehicles. The Colombo Stock Exchange saw trading for the second day in a row. Throughout the session, losses were monitored by the ASPI and S&P SL 20. And President Trump's announcement of high tariffs against South Korea, Japan and other trading partners caused Wall Street's major indexes to close much lower. Good evening and thank you for joining us. In June 2024, Sri Lanka welcomed 138,241 foreign tourists, a 21.8% increase from the previous year. Over the first half of 2024, total arrivals reached 1,168,044, with January seeing the highest monthly number at 252,761. Last year, the country recorded 2,053,465 foreign tourists, showing continued growth in tourism.
According to the Sri Lankan Tourism Development Authority, 138,241 foreign tourists arrived in Sri Lanka in last month. This number shows a 21.8% increase compared to the June last year when 113,241 tourists visited. The SLTDA's monthly report reveals that a total of 1,168,044 foreign tourists have arrived in the country during the first 6 months of last year. Last year, Sri Lanka recorded a total of 2,053,465 foreign tourist arrivals. January 2024 saw the biggest number of tourists in the past 6 months with 252,761 visitors. In both February and March, over 200,000 tourists arrived each month, with 240,217 and 229,298 tourists respectively. These figures indicate a strong recovery and growth in Sri Lanka's tourism sector. The steady flow of visitors highlights the country's increasing appeal as a travel destination. The tourism industry is expected to continue the positive trend throughout the year, contributing significantly to the national economy. Authorities are focusing on sustainable tourism practices to both ensure long-term benefits for both visitors and local communities.
Sri Lanka's new tourist value-added tax refund scheme aims to boost gem and jewellery purchases by tourists after new taxes imposed due to the IMF program caused a 25% export decline from $477 million in 2023 to $316 million in 2024. Despite nearly 8,000 operating mines with the potential to produce over $1.5 billion worth of gems annually, export earnings remain much lower. The sector could become the country's second largest export industry if production is fully converted to official exports. The VAT refund scheme is expected to increase tourist spending to $250 to $300 million within the next year, supported by a forecasted rise to 3 million tourist arrivals in 2025. This initiative aims to reverse the decline caused by VAT and boost foreign exchange inflows. Industry leaders are optimistic that the scheme will help Sri Lanka regain its position as a competitive destination in global jewellery market. The Central Bank of Sri Lanka has clarified that no decision has been made to restrict vehicle imports, dismissing recent media reports suggesting otherwise. Since February 2024, vehicle imports have resumed with around 18,000 vehicles brought in, supported by available dollar reserves in the country's commercial banking system.
The Central Bank of Sri Lanka has emphasized that no decision has been made to restrict vehicle imports, dismissing recent media reports suggesting otherwise. Since February 2024, when vehicle imports were for private use allowed after a 5-year pause, approximately 18,000 vehicles have been imported, with 13,614 registered at the Department of Motor Traffic. Letters of credit worth around $800 million have been opened for vehicle imports, and vehicles valued at $450 million have been bought into the country. The central bank clarified there has been no communication or recommendations between it and the Treasury regarding import restrictions. Market inquiries show that high import duties significantly increase vehicle prices in Sri Lanka compared to their original cost abroad. Additionally, reports indicate about 300 vehicles are being held at Hambantota port in violation of import regulations, and the Ministry of Finance is consulting with Sri Lanka Customs on further action.
A high-level delegation from Nepal's federal parliament recently visited Hambantota International Port to explore business opportunities and learn about the port's infrastructure and operations. The visit aimed to strengthen regional cooperation and promote cross-border commercial partnerships. The delegation, including senior officials from the federal parliament secretariat, received a detailed tour of HIP's modern facilities and briefing on its growth strategies. HIP representatives highlighted the port's strategic location and multi-purpose capabilities, positioning it as a key logistics hub in the Indian Ocean region. They encouraged Nepalese investors to consider trade, logistics and industrial collaborations through partnerships with the Hambantota International Port Group. This visit marks a significant step in enhancing economic dialogue and investment ties between Sri Lanka and Nepal. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange experienced its second consecutive day of trading this week. Both key indexes, the ASPI and S&P SL20, tracked losses throughout the session. As a result, the trading day concluded with both indexes ending in the red. For further insights, we speak with Akna Thenakon from First Capital Holdings.
Thank you, Prasansa. The Colombo stock market witnessed mixed sentiment today as investor caution grew over rising discussions surrounding potential tariffs. The all-share price index opened on a bearish note, slipping early in the session due to selling pressure. However, as the day progressed, the market saw a modest recovery driven by bargain hunting, ultimately ending the session nearly flat at 18,032 with a marginal decline of 10 points. John Keel's Holdings, CT Holdings, H&D